Students, welcome to accountancy class. I am Narsimlu, commerce teacher. Today I am going to teach you CEC first year accountancy. See students, here in this video I will explain one 5 marks question that will be given in the annual examination from the topic ledger. So in the previous videos I have explained what is ledger and how the ledger can be prepared, ledger pro forma and posting of journal entries into the ledger accounts. In the annual examination you will be asked to prepare a ledger account for the given transactions. So in the annual examination the question may come for 5 marks like this. See here, one question is given, ledger accounts, 5 marks question. Prepare Vijay account from the followings. Prepare Vijay account from the following. Here you asked to prepare a ledger account of Mr. Vijay and given some transactions. Here you see what are the transactions. 2016 February 1st account due from Vijay rupees 8,000. February 4th goods sold to Vijay rupees 11,000. February 12th goods returned by Vijay rupees 4,000. 16th February cash received from Vijay rupees 3,000. 22nd received check from Vijay rupees 6,000. And 28th purchases from Vijay rupees 1,000 and settle the account at the ending. Okay, see here, this is the problem will come in the annual examination, 5 marks. Okay, so when the problem is given like this, you need to prepare a ledger pro forma first. To solve this problem, first you need to prepare a ledger pro forma. So the ledger pro forma, you know how to prepare it. So here date, particulars, JF number, amount, date, particulars, JF number, amount. In this way you can go to prepare the ledger pro forma. Okay, next, whose account we are asked to prepare here? Mr. Vijay. On the top of the ledger you can go to write as a title Vijay account. Vijay account. Okay students, right. After writing that, first you go for transactions related to Vijay. On 2016 February 1st, amount due from Vijay. Here he is a debtor because he has to pay amount to the business organization. So he is the debtor. So he has to pay amount, or he has to settle, or he has to give the amount to the business organization rupees 8,000. So we call him as a debtor. When he is a debtor, we can go to write amount on the debit side of his account. Here 2016, first in the date column, February 1st. You can go to write as opening balance to opening balance, or you may also write as balance brought down. So when he is a debtor, you can go to write debit side as opening balance. When you see the words, these two words due from, then you can go to write the opening balance of the debtor account. Okay, so you think whenever you find these two words in the transaction, due from, amount due from, when you see these two words in the transaction, then you think that the person is the debtor. So debtor means nothing but an asset to the business organization. So assets always show the debit balance. For that you can go to write Vijay account debit side in the date column. First you can go to write date, that is February 1st, to opening balance, or you may also write as balance brought down. Okay, rupees 8,000. You write rupees 8,000. Second transaction, you see goods sold to Vijay. Then what is that entry? First you think it in your mind. Vijay account debit to goods sales account. So in the entry, Vijay account is a debit account. So Vijay account debit side, come date 4th to sales account or goods sales account, both are accepted. So amount of rupees 11,000. Amount of rupees 11,000, like this you can go to write. Come to third entry, third transaction, that is goods returned by Vijay. So Vijay returned, giver is the Vijay and we are the receiver. What we are receiving? Goods, sold goods returned or sales returns. Those goods are called as sales returns. Sales returns account debit to Vijay account. Vijay account is a credit account in the entry. So in the Vijay account credit side, first you can go to write the date 2016 February 12th by sales returns. Here you can go to write sales returns account, amount of rupees 4,000. Okay, sir. Here Vijay returned the goods because we sold earlier some goods to Mr. Vijay, and those goods which are not good or something happened and he returned those goods to us. So such goods are called sales returns. Sales returns are goods returned by Vijay. So what coming into the business? Sales returns goods are coming into the business. That should be debited. And who are the giver? Vijay is the giver. Vijay account should be credited. So we can go to write the entry like goods returns account or sales returns account debit to Vijay account. So in the entry, Vijay account is in the credit account. So in the Vijay account credit side, write date in the date column 2016 February 12 and opposite account in the particulars column by sales returns account amount 4,000. We completed third transaction posting and come to fourth one, cash received from Vijay. We receiving cash. Okay, cash coming into the business, that should be debited. Who are the giver? Vijay is the giver. Then what is the entry? Cash account debit to Vijay account. So Vijay account is a credit account in the entry. So come to Vijay account credit side, date 16 by cash account, amount of rupees 3,000. Okay, students. So here we completed third posting also. Come to fourth one, received check from Vijay. Same. Here instead of cash we receiving check. So when check is coming or going? Coming. So it should be debited. So here instead of check you can go to write the word bank. Bank account debit to Vijay account. So in the entry, Vijay account is a credit account. So come to Vijay account credit side, date 22nd, right, by bank account rupees 6,000. Okay, sir. Rupees 6,000. And come to next and last and final one, that is purchase from Vijay. We purchase the goods from Vijay. So purchases account debit to Vijay account. Purchases means goods. Goods purchases. Purchases means here goods coming into the business, that should be debited. And who is the giver? Vijay is the giver. So when Vijay is the giver, his account should be credited. Then what is that entry? Goods purchases account debit to Vijay account. So Vijay account is a credit account in the entry. So come to credit side of his account, date 28 by purchases account rupees 1,000. Okay, student. So we completed ledger posting. Now we have to settle the account. How we are going to settle the account, you just see. In the working notes, calculate the total debit column amount. So in the debit column total amount, you can go to calculate it in the rough notes. So total debit amount you can go to calculate. So total debit amount, that is 19,000. And come to credit column amount. You can go to calculate the credit column amount also. So here credit side amount, total amount is 14,000. So credit side 14,000, debit 19,000, credit 14,000. So in these two, whichever is the higher amount, that can be written both the total side, totals as 19,000, 19,000, both the sides you can go to write total as 19,000, because here 19,000, that is the 19,000 rupees the debit total amount, and credit amount total amount is 14,000. So in these two, whichever is higher, that should be written both the sides of amount column. Okay, next here we have to find the difference between debit and credit. So here whichever is the higher amount, from that we can go to direct the lower amount. So debit column is the higher amount, that is 19,000. Credit column amount, that is credit side amount is, that is 14,000. From the higher amount you can go to direct lower amount. You will get the difference figure, that is 5,000. Difference amount 5,000. This difference amount you can go to write here as a bank, or February 28 by bank rupees 5,000, account settled, account settled. In this way we need to prepare the ledger account of Vijay. Okay, so this problem will be given in the annual examination for 5 marks, topic that is ledger. So from this chapter, ledger chapter, you will get one 5 marks question in the annual examination. The question will be like this. What is the question? You see, prepare Vijay account from the following, and here date is given, some transactions. First transaction, amount due from Vijay, due from, which tells us that the person is the debtor to the organization. Okay, here debtors, when he is a debtor, his opening balance shows debit balance. So Vijay account debit side, you can go to write to year, that is 2016 February 1st to opening balance rupees 8,000. Okay, next, goods sold to Vijay. When we sell the goods, that can be taken credit side of his account, and we've written amount, debit side of his account, amount of rupees 11,000, and goods returned by him. So when we sell the goods to him, that is written in the debit side, and when goods are returned by him, then that can be written credit side of his account as per entry. Okay, next, we received cash from Vijay, and in his account credit side we can go to write rupees 3,000 debt and cash account, and we received check. Here instead of check we are writing bank. I already explained why we have to take the bank word here. So here bank account rupees 6,000, and we purchase the goods from Vijay. We purchase the goods from Vijay, that is rupees 1,000. Now finding the balance, here calculate the total in your working notes. Calculate the total debit side amount, that is 19,000, and then you can go to calculate credit side amount, that is total 14,000. And here whichever is higher value, that can be written both the sides as a total, and after that deduct lower value from the higher value. You will get the difference figure that can be taken as a bank. Here you can go to write on 28th by bank rupees 5,000, account settled. So if you prepare the ledger account of a given person in your annual examination, you will get 5 marks. Students, I hope you understood how to prepare a ledger account that will be given in the annual examination for 5 marks, and I hope children you will score 5 marks from this topic. Thank you for watching this video.